The MoneroTopia Price Report segment is sponsored by Exolix, a privacy-focused, non-custodial instant crypto exchange. Go to exolix.com to enjoy secure and completely anonymous swaps with no KYC or sign-up. Swap between Monero and 2,000 plus assets at the most competitive rates and with no limits. Exolix.com, your fast and secure way to privacy.
GMGM Body.
Hello, what's up, guys?
What's going on, man? How you doing?
I'm good. Got a full night of sleep last night. It was wonderful.
Nice.
Went to bed early and everything. It was so wholesome.
Yeah. What allowed that to happen?
I don't know. I just decided not to be retarded.
Yeah, I slept very well last night too. I had a good workout during the day. I think that's what triggered it. It was nice.
You know what?
Penelope wasn't here last night. She's
there you go.
At her grandmother, so that may have helped as well.
Yeah, you know what? I think triggered some like bad sleep for a few weeks, maybe like 4 weeks actually. I tried like going to this different split lifting, and so it's basically 6 days on, and you're just doing upper lower splits. And apparently you might even be better doing just full body 3 days a week than doing upper lower splits for 6, because you get like systemic fatigue. It was crazy because I was like making progress, but I could kind of like feel this incremental fatigue just creeping on, even though I was making progress and not like definitely not moving backwards. And eventually, like it just kind of hit a slight breaking point, and part of it was like I wasn't sleeping as good anymore, so I had to like dedicate myself to taking a chill pill and trying to get some more sleep.
Yeah, that's like a lot of stress hormone being released, right, and stuff, and then obviously your body just doesn't have time to recover. Like I work out now. I basically just work out twice a week now, and I just do those days pretty much like back to back, like Thursday, Friday, or I'll do like Tuesday, Friday, and that just gives me. And on one of those days I'm doing legs, lower body, and the other day I'm doing upper body. So I try to like literally space it out as much, so my body has like a week to recover. And that's actually been, because that's always been my problem, like injuries and stuff. And obviously my ankle is a whole issue, but it works out pretty well. I've actually been starting to trend kind of back up in terms of going up in weight and stuff, allowing my body to heal for an entire week. It's been working out.
I mean, the recovery obviously is pretty important. Well, I've been reading on like recovery and like how quickly your body is able to recover. And so the idea was reducing the sets in a single session to like 1 or 2, but then doing it more times per week. And it definitely seemed to, like, as far as the muscles were concerned, they were able to recover from that. But yeah, just the 6 days on, your central nervous system, apparently it's a little bit too much for most people, unless you're like a beginner, or maybe if you're on some of that TRT or something, which you don't do any of that. So
I used to be like that. I used to be working out every day, like it was like part of my routine. Yeah, it's not even so much the muscles for me. It's like my joints and ligaments and stuff. Like that's where I get my my injuries. And those things don't fucking heal, right? You get like a freaking tennis elbow or golfer, whatever you want to call it, once you get that, and that could be from doing pull-ups the wrong way or something. Once it goes, it becomes like it's very hard to get rid of without like just not using it at all and like proper nutrition, or I guess if you're doing some other kind of like alternative therapy. But
I do a shitload of like alignment, trigger point. I wouldn't call it stretching so much. It's kind of like dynamic stretching, but like joint mobilizations and warm up stuff like that. Like I spend literally 40 minutes to an hour just like doing a warm up routine, doing like a mobilization routine.
That's awesome, man. Yeah. No, I'm sure you're doing it all right, but this is what my life affords me at this point, twice a week.
Yeah,
and then the other days, so I'm like, I'll just go outside, like we're discussing the other day, touch grass, take my shoes off, hang out, and like maybe like try to sprint like 100 yards. Do that like twice.
Oh, bro, I know you're touching grass every day. Please.
I got it, man.
Both kinds.
I'm an animal. I need to be outside. Can't be stuck inside.
Tuck's got it.
Yeah, I got it too.
Well, shall we do it?
Yes.
let's do it.
We do have a super chat from Ernie C. Tip 25 cents Monero Talk Rules. You guys are doing amazing work. Thank you. Thank you, Ernie C. Appreciate it.
See.
All right.
Right.
Doing pretty good on price still. We had that dip last week. Seems like we're heading on back here. Above 200, well above 200, 215 currently. Still in this band structure. This is going to be, honestly, talking about the Monero price is, well, it sometimes can get a little bit boring because Monero price doesn't do much. It just kind of stays stable, and then it goes up sometimes. Like once every few years, it'll go up, and then it'll be stable again. That's really what we actually should want from price. That's better for adoption. So right now, we're basically looking at the two band structures here. That's the very long-term bands and then the slightly shorter-term bands. And we're forming, kind of this thing where we're doing this seesaw action in between the two of them. And if you look at it, we could probably extend this to the right some. I don't know how far could we take this into the future until you would hope. Yeah, so I mean, this thing could really continue going on for a few months. Obviously, macro crash, all bets are off. This thing could take some big dips. I think we have talked previously about eyeballing that $135 level as a gift from the crypto gods if they were to give us such a thing. And then hypothetically, in the really like worst case scenario, I would expect probably 100. If there's some like huge systemic crash that, and then the intervention and the liquidity and all that has to happen, I'll be eyeballing $100. Obviously, again, as we always say, subject to change in real time, right? Subject to reevaluation in real time, which you always have to do, right? If you have targets, I mean, hell, I do that over the short term as well. Like if I'm trying to take short-term plays, I'll be like, okay, here's my levels. Here's what we're looking at. Kind of create a plan, everyone has a plan until you get hit in the mouth or until the dips on you. And then you got to figure out what to do after that. So just always keeping your plans versatile that you can readjust in real time if the situation seems to change. At the moment, the situation is not changing with Monero at all. We are basically just continuing to set lower lows. You'll notice as of the past, I guess that was actually 2 weeks ago, we set a slightly higher lower low on that wick right there from the wicks that happened. What date would that be? That would be the beginning of February. So, Monero still looking strong. We can see this in the Bitcoin versus Monero price. Basically still kind of up here at those blue bands. We said that we would expect that these blue bands would pose some kind of resistance zone. I would have hoped to see this resistance zone to be slightly higher, right? I would like to see Monero at the 0.00, is it 0.002 level? Yeah, 1, 2, 3, 1,000. Okay. At the 0.002 level. Or 0.0257, I should say. I would hope to be a little bit above that. It's like maybe at the 0.0027 level. That would be kind of where I would personally want to be, basically at this area right here. I would want to be consolidating in this area because that's, slightly more bullish. Again, if the crypto bull market decides to make a reemergence and take off, it's going to be difficult to think Monero is going to keep up with Bitcoin on any major pumps. That's just not how we've seen the price action unfold for the past 4 years, 5 years now. So I don't expect that to change anytime soon, but that's okay. We get our turn. Our returns come in sort of counter-cyclical movements as the markets are flat and sideways or slightly down. That's usually when Monero kind of tends to make its comeback. But yeah, I guess things are okay. Things are fine here with Bitcoin and Monero. We've sort of broken down from the uptrend line, this line right here, if you can see that. Things have definitely broken down below that line as of this past week. You would basically call that confirmed. That's okay. Like nothing goes up in a straight line, and all short-term lines were eventually meant to be broken. Some of them turn into long-term lines, but that's rare. This one has lasted since basically the bottom in November. So okay, yeah, things are looking fine there with Bitcoin versus Monero price. I don't expect any fireworks on that chart anytime soon. The Monero dominance is actually looks like a bit of a nicer chart if you ask me. That's the 8-hour. Let's go to the daily. Get a little bit more price history here. Yeah, so you can see here on this price chart, effectively we set the lower standard deviation bands at about 0.1% of the entire crypto market cap, and that's what these orange lines are down there. And then the blue lines were set from back really like a year, almost 2 years ago now, right? From this up move here, and then the blue bands here are effectively right now kind of capping the price action there on Monero. you would hypothetically say that, okay, we've come to the top, we've come to the bottom, we're back here at the top. That usually is enough oscillation to make some new kind of breakout, but this is XMR.D we're talking about. So I wouldn't expect this chart to break out either, to be honest with you guys. It could potentially break out a little bit. Like this thing might give us a little bit of oomph all the way up here to the like 0.17% level. Perhaps like if a miracle happens, we could even get to the 0.2% level. And then up here, and then maybe like come back down, or maybe not. I honestly, I wouldn't expect that to be the case. I would really just kind of hope for consolidation here in the blue level for some period of time. Again, it's the same thing with the XMR.D chart as with the XMR BTC chart. If you get a resumption of the bull market, don't expect to keep up in the market cap overall with crypto, because like just crazy shit pumps to the top side. And I think all you guys, I think you all definitely know about that. We haven't looked at the XMR gold chart in a while, so we'll do that. Not again, so we're on the weekly here, so this is big broad view. Yeah, we definitely had a nice big comeback here for the past, really for the entirety of almost all of 2024. And so we're basically hanging out in the standard, in the moving average cluster here, the white bands right there. So kind of hanging out at the moving average bands, and that's, I guess, kind of boring. Hanging out at the moving average is definitely slightly boring, but hey, what are you going to do? Yeah, nothing too special with this chart, kind of setting higher lows progressively over the course of many, many months. Gold price, man, I guess gold has just been on a tear. It continues to set new levels, new highs. Okay, so anyways, yeah, XMR gold chart. I don't really have any like striking commentary for this chart. So anyways, apologize for that. Let's go to Bitcoin. Let's go to crypto. One thing that's interesting you'll notice here is that as far as the Z-scores are concerned, as far as comparing Monero to its relative volatility with a 100-day look back, Monero is still doing quite well compared to basically everything else. Let's see what else is doing good. What else? Maybe XRP try to like make a little pump here recently. Perhaps Binance Chain. Yeah, I don't know. Yeah, I don't know. Monero's, again, we've been at the top side relative to everyone else. This is unsurprising because everything has just kind of slowly been bleeding off since January. So, yeah, but what you'll notice here, we're basically at the 0 point, right? We're at the 0 Z-score level, which kind of basically just means flat. When you hang out at a certain level like that for that long, like it kind of, especially if you're above the 0 point and you're kind of flat, that usually means you're going down. I won't redescribe the mathematics of how Z-scores work. It's just a very, very common way of normalizing assets with I shouldn't say assets, anything that has a disparate number with too many zeros behind it that makes it difficult to compare to another number with less or even more zeros behind it or in front of it. That's what Z-scores are for. You basically can just normalize everything to a 0 point. Anyways, XMR doing better than everything else for the meantime. Cool. I won't expect that to last too long. Still waiting on this macro crash, but we got a couple extra signs here, but it's still skeleton at the keyboard here for macro crash at the moment. So let's talk about Bitcoin. Currently, Bitcoin has made a little bit of a comeback here. It kind of had the big scare off down here to the 76,000 level. That's pretty close to getting, to tagging the actual 73,000, the previous all-time high. Let me see if I can make this brighter. Sorry, this is going to take a second for the chart to reload. That's the wrong one. Of course, I clicked the wrong one. Yeah, I try to put these brighter for you guys so that you can see them, because I realized on YouTube it doesn't always show up super bright. I think that's close enough. Anyways, okay. So these are moving average cluster right here. The more prominent aspect of the moving average cluster still does hang out at about 74,000. That's kind of where I would sort of expect it to have touched, but maybe it's too obvious to go straight exactly to the to the previous all-time high. So things have definitely kind of touched that previous all-time high almost. I mean, what's that? What would that measurement be? Within 4%, within 4%. Sorry about the bells, guys. There's nothing I could do about that. Just imagine that it's Christmas or something. It's actually garbage collection. Anyways, I don't know if y'all can hear that or not, but I can. Okay, anyway, so as far as wave magic, as far as the technicals are concerned, basically you have these blue band structures that came up here. Normally you would expect to set that as like a support. Instead, things came to the top side, got sort of stopped out at the purple bands, which is exactly why these purple bands are really useful. You'll notice that's exactly where things kind of found their stopping point. And if again, if we were like in this like super bullish scenario, this should have held, right? This area right here, when things broke down on at the end of February, 84,000, that should have held. That was like a key spot that you really wanted to hold, 85,000. And it almost pretended like it was gonna, and then it just didn't. And so now effectively this area right here, the 86,000, that's actually resistance. So Bitcoin tried to get above there this week. It was unable to get above the 86. Let's do a real perfect measurement on that 87,000 level. Bitcoin was unable to beat 87,000 on Wednesday, and then it kind of has pulled back a little bit. We could drop into the lower time frame and try to do like a little bit more near-term analysis. Heavy on the tea leaves today. Heavy on the tea leaves. We'll talk about some macro stuff later, but I don't know. I just didn't see anything. Maybe I missed something in the news because I wasn't like paying a huge amount of attention, but I didn't see anything too crazy interesting happening in crypto. I think everyone's just kind of like, crypto's in like this boring spot right now. It's like, okay, nothing's happening.
It's in like a limbo.
Sticks at it. What's that?
It's in a limbo.
Yeah. No one knows what to do. I mean, I've actually been pretty proud, like, of the crypto space. They're not like, oh my God, to the moon, and they're not like, oh my God, it's about to die. I've seen like a little bit more rationality from like the crypto people in general. So maybe everyone's maturing. That's possible. All the millennials are starting to grow up and get that wisdom. It could be the case. Okay, yeah. So on the shorter time frame, we're on the 4-hour candles here. We're basically inhabiting this orange band structure, which is the lower standard deviation band structure. You'll notice it's kind of rolled over. We have set it now a couple times as this support. And what's crazy, guys? I mean, this stuff is so good. Like, let's go to the 2-hour. You'll be able to see this a lot better on an even shorter time frame. But effectively, you'll notice that, like, where did things stop out here? Exactly that lower standard deviation cluster, the very bottom of the standard deviation cluster. Same thing, maybe not quite right here. That would have been more right there. But these standard deviation clusters are just like really incredible for kind of predicting where spots that could be good pivot moments. Anyways, so the point is that, price is still hanging out in this lower standard deviation band structure, right? So basically sitting just below 90,000, so like 89,000, and currently at like 82,000. That's sort of like the orange band structure there. And right now, I wouldn't expect things to change. Like, hypothetically, if things pump here, I would probably short. I'm probably going short at 89,000. These band structures are moving, by the way. So when I say that today, that's not going to be the same price at the same point next week, right? These bands are dynamic, and so you kind of always have to be reevaluating them, which is why it's hard to it's hard to set them up for like if you want to set orders, like you have to reevaluate them pretty regularly because the location of the bands are going to change. Often they flatten out and they don't change very much at all, but sometimes like they can be really dynamic. Anyways, Bitcoin is sort of sitting in no man's land, kind of like Tux said, limbo. No one really knows what to do here. People are like, wait, shouldn't we have already gone up again? What the fuck? And then there's like the macro crash fears happening out there, of which I am a purveyor of such fear. So I apologize. Sorry, not sorry. Excuse me a moment. Okay, so yeah, that's Bitcoin. Where's it going to go? What's it going to do? Let's go to the shorter time frame, and I'll give you some Nostradamus predictions here. I'll just pull something out my ass. Okay, Bitcoin is probably going to... Oh shit, man! This didn't bring any clarity at all. Bitcoin's going to try and continue moving towards the upside here for some period of time next week. Looks like to me, unless we actually get some big macro crash in earnest. It's effectively trying to set this moving average cluster here at 84,000, and it's going to bump up here to 85, and then wiggle around, and then try to come back at the top side. It'll probably make 88,000 sometime next week, in this upcoming week. At which point, 88, 89 is most likely a good shorting opportunity. At least for a swing trade, and then perhaps that could turn into the macro crash and you could let that run. I don't know. Anyways, I don't really believe any of that. I'm just kind of like giving you some Nostradamus predictions on what's going to happen for this next week. So if you really wanted to try and trade just some very unconvincing Bowdy analysis, you could long Bitcoin.
Yeah,
right
what
here.
happened to that macro crash last week?
I didn't say it was happening last week, bro. You don't put me on that. I recant. No, I don't. Let's go to the macro. So the point is, guys, like, shit's flashing yellow. Okay, so let's go to the old chart. That's maybe the biggest one here. Maybe I need to just draw permanent lines for this. So we said this is the yellow zone, right? This is our yellow zone. This is, hey, start paying attention. Things could get bad. Like, this is the beginning of breakdown. And then we said down here, This area here is flashing red. If you start seeing closes, multiple daily closes in this area, so basically, sorry for the people that don't have the charts pulled up, they're just listening on audio. Effectively, we said that the yellow zone for oil is effectively below 69 and above $66 per barrel of oil. So we're clearly in the yellow zone. Breakdown from the uptrend has clearly happened. But anything where if you start seeing closes below $66 per barrel, that's flashing red at you. That's like, hey guys, shit's really, really being problematic. Now you want to corroborate that against other stuff, like for example, the reverse repos. So remember we talked about the potential for reverse repos to actually start showing some kind of uptrend. This might be the beginning of that. It's still maybe a little bit not as beautifully uptrendy as I would like to call a chart, but it still is fairly right. So you got a bottom out there that happened. It pretended like it was going to come down. It wanted to try and come lower. The lowest it could go is 0, currently sitting at about 200 billion. But it had dropped as low as 57 billion. Okay, anyways, so it kind of dipped down, but then as of this week, it's come back up. Has it set a higher high? No. But if that, again, we're looking like, is it going to do this? Is it going to start doing this action? Because that action, an actual uptrend. So if we get daily closes on the reverse repos that are above 240 billion, 250 billion-ish on the RRPON chart from the Federal Reserve Bank of New York, if we start showing an uptrend there, that is again another corroborating signal. So if you see reverse repos showing an uptrend and you see oil going into that red flashy zone, that's really where you want to start being very, very careful. Hell, you probably want to take some shorts. Like seriously, if you see those two things, then you probably want to start looking at taking some shorts. And then again with the bonds. So we're always talking about bonds here. Very interesting bonds. The most interesting, some would say the most interesting. And so if the bonds start curling down, again, if we start seeing drop off in the bonds, that is another corroborating signal. Bonds usually happen like synonymous with the crash. Sometimes like you might have a few days of lead time. You might at best have a week of lead time. But if you see bonds crashing, reverse repos going to the top side, and oil crashing, that is your sign. That's like, get the fuck out of the market. Don't wait for Saturday, right? Don't wait for me to come here and tell you. You're gonna have to monitor that on your own time, because this shit can go down on a Monday. Right. So I can't do anything for you on a Monday. I can post to Twitter, but I don't know how many people are actually on Twitter, and I don't know how many people should actually be on Twitter. All right, let's go to the credit spreads. Again, credit spreads are the difference between government rates and corporate rates. When everything is fine and everyone believes in the economy, that spread drops very, very low, because corporations are considered to have, risks similar to the government, right? So the corporations can offer lower rates. But when shit gets uncertain and people are getting scared and they're not sure what they should do, the corporations, you think, well, hey, how many of these guys are going bankrupt? I demand higher rates if I'm going to give you money, corporations. And so that spread increases, okay, right? Corporations have to offer higher rates, whereas the government can, they can usually just keep their rates pretty low. They're the safer bonds, right? There's even a demand for government bonds as shit starts to crash, because the government's not going to go bankrupt and they can just print more money. So they'll always be able to pay their rates. And that's true. That's actually true. So people consider government bonds significantly safer. They move to government bonds and out of corporate bonds, which actually can help to push the government bonds down. That can push the rate of government bonds down. So corporate spreads, as they spike, is usually something that happens synonymous with crashes, right? You can actually see this in the chart very clearly. Here's the 2020 crash. You can go all the way back here to 2008. Look at that guy, right? That guy went from 2.5% all the way to a spread of 21%. Wow, fucking Vegas blackjack. They did it. So you can basically see that if the credit spreads start spiking again, that's another way for you to think of corroborating signals, right? Is this thing actually happening, or we still got to wait? I know I talk about it a lot, but we are in the crosshairs, guys. We really are. This shit, I still think this is happening. It could be happening next week. Maybe it still takes a few more weeks, right? Maybe it takes until mid-April. I don't know. I do
know
think
exactly what day, body. I need that crystal ball.
God, I should have never called the top. I should have never called that April 14th top, because now everyone expects freaking 1 day candle resolution on the next crash. I can't, guys. Do my best, but I'll try. I'll probably be able to give you at best 24 hours of warning before the shit happens. So Yeah. Anyways, one thing I think that is instructive is to look at this oil chart. Remember, guys, I told you for like this entire time, I was like, this is bullshit. I was like, this is a chart pretending like it's not going to break down, like it's going to, come back up. And it's not what's happening. Oil is going to come back down to the downside. And then it broke down that uptrend, right? That broke down there. And now things are just hanging out, and they've hung out here for 2 weeks. Notice in this, is it 2 weeks? Maybe we call it a week and a half now. It's hung out in this area now for like 2 weeks, whereas like you've only had a few days here, a few days here, a few days here, right? For the most part, oil was not hanging out at this level for a week or two on end. It was just kind of dipping down there. Well, now we're hanging out there for a week or two on end, and it's almost doing the same kind of bullshit action. It's like, oh, we're not actually going to drop. We're gonna do this, and then eventually that's going to happen. The bottom's going to fall out on this thing. So, it's like I don't know if that's a natural market action, or if there's kind of like players in the background trying to keep this shit together for as long as they can, trying to delay it for as long as they can. And like they're fighting against natural market actions. Maybe they're just having fun and laughing in their smoky corporate boardrooms. I don't know. Anyways, it's just kind of instructive, I think, because it's like this, just like the oil chart hung on for a period of time here before starting to break down. It's like trying to hang on for its last gasps here before it's going to break down again. So how long could that be? I don't know, a week or 2 weeks, whatever. But I'm just trying to give you the tools that you need so that you can look at the markets yourself without Bowdy. You don't need my guiding voice here every day. You just need to look at the right things, and then you'll be able to short the market.
Are you saying I should do my own research and not take everything you say at complete face value?
Dior, bro, Dior. Is that how you pronounce that? I don't think anyone pronounces it that way. I don't think anyone pronounces it.
Not blame you for any potential losses I incur.
Come at me, bro. Come at me. No, please don't. I don't want to go to court. I probably won't even show up. You'll just win the default judgment. Then I'll just like move to, I don't know, Suriname or something. Some random country you can't pronounce. Okay, let's go to gold. Gold has at least like been pretty good. We're on the 4 hour. We'll go to the daily. Gold found another all-time high. Made it all the way to 3,000.
3K. Yeah, clap for gold there. Wow.
I think, do I have a sound effect for this? Hang on, let me see. It was the highest quality sound clap we've ever had on the show. So yeah, gold set 3K. We were expecting that was going to happen. We've been expecting actually continued positive movement in gold. I keep saying if there's a macro crash, maybe gold will fall too. But it seems like gold is a safety play. Like stocks are down, stocks are crying. Weak Doge with his tears, but gold continues to perform. The luster of gold is very attractive for the market at the moment. So I was actually looking for something this week, and I wanted to actually short gold on a stupid little swing trade, and I just missed it because I was not paying attention. Anyways, these purple bands are so perfect. God, they're so good. Yeah, things touch the top of these purple bands, and that's like usually a good spot to look for like a temporary pullback. So that was actually good for like a 1.5% pullback. But let's go to the longer term and just get our bearings again. So, we're effectively gold is kind of riding up these bands, and maybe I don't know. For all I know, that could be a more long-term top if we're getting any kind of macro crash, which could still be some ways away. But this purple band right here, I'm definitely expecting to touch that. Like that should be forthcoming. It's too obvious. Like we've talked about for weeks. That is a solid spot if you want to convert gold into something else. That is a solid spot to look for to do it. But there's also the oh no. Okay, never mind. There's also this guy up here. There's another purple line up here. The difference is that these purple lines at the bottom are static. So they're like the 100-day, the 500-day, the 1,000-day, the 5,000-day or week, etc. Whereas the solid purple line up here, that is the continuously computed lifetime upper standard deviation derivative or extension, if you will. And so it's like the problem with these moving averages, or like, let's just call it a moving average, right? If you're doing a moving average, it's 5,000 days and it's rolling, but it's not for the lifetime of the chart, right? It doesn't start from the very first candle. It just rolls with the next candle. And so you're not getting the full, complete, like moving average of the entire lifetime of the chart. You have to do some special there. And there's maybe someone has put something into TradingView lately. I don't know, but I had to like specially program that shit so that I could look at every single candle. And every time there's a new candle, it recalculates for the new candle. And that's what this upper purple band is. Anyways, that's like a very extremely headliner spot. That is the place to sell your gold into something else. If we actually can make it up there, Looks like this line will do something like that. So currently it sits at about 4,000, and more like 3,800, 3,900. Obviously it's moving towards the upside, so we don't know exactly when we'll get there. Probably, it'll probably, overall, this chart will probably continue trending upwards for the next year or so, at least for the next year or so. So we're really looking at like 4,000 gold by next year, and $4,100, $4,400 gold, perhaps over the next year or so. Touching that line is your headliner spot to like just rebalance. You're not trading. You're just rebalancing your portfolio. You're rebalancing assets. Gold has become a significantly larger portion of your portfolio. Rebalance that into, I don't know, anything else that you feel weak on. Perhaps you're not part of the landed gentry. Then you need to get some land, bro. And there's there's definitely the philosophy of you shouldn't be allowed to vote if you don't have land. Probably just shouldn't be allowed to vote. Nobody should be allowed to vote ever. But your stake in society, etc. There's like this whole philosophy about that. They're probably not entirely wrong. Anyways, yeah. So gold continues to rise. That's cool. Everybody's happy for that. Dixie hasn't done much. It fell off. I say we, obviously America. Dixie fell off and has just kind of been chilling here, riding between 103 and 104. Cool. I don't know if this chart's going to be all that instructive for us at the moment. Maybe if it starts going back towards the upside, Dixie gets a shitload of volatility. Like in a macro crash, it'll go down, it'll spike down, then it'll spike up, and then it'll spike down again. Usually at the end of everything, it'll downtrend over a period of time. Like it'll spike up because everyone's like, safety play dollar. And then they're like, oh, okay, they intervened. And then the Dixie chart will start like gradually moving towards the downside. As people reallocate into risk. Very common thing for that to happen. We can take a look here at the global liquidity and the United States liquidity, which is in green. U.S. liquidity is in green. It has been coming towards the downside, which means that liquidity is coming out of the markets. A lot of that was mediated by the reverse repos spiking up lately. So that's probably where part of this is coming down. The other part is, again, the Federal Reserve is selling their balance sheet. Jay Powell decided to hold his hand steady as a rock on Wednesday and not change rates, which is exactly what we expected him to do. Let's see. Did he say anything of importance? God, he's so boring these days. He used to be fun to listen to, but I'm not getting anything from him. I wish he would like spice it up a little bit, but I don't think he really said. I kind of like listened to the first 10 minutes and then I got bored and switched off. But yeah, they're going to hold rates steady. He said maybe 2 rate decreases this year, but that goes out the window if the economy starts to crash. So yeah, nothing interesting there. Okay, let's see. S&P 500 and the NASDAQ. Come on, charts. Expand. Okay, there we go. Yeah, they set some kind of low. What is that? Minus 10% probably. Yeah, they went down about 10%, which is, I mean, we could go back through some history here. In 2024, there was a 10% fall off and then it came back. So, people really aren't super uncomfortable at the moment. There's the people with their, like me, being like, the macro crash is coming, guys. But everyone's heard that so many, like everyone's been shouting that from the rooftops for like 2 years now, and it hasn't happened. That's usually what happens. Like people are going to be like crash, crash, crash for like 2 or 3 years, and eventually it'll happen, So it's about like trying to nail down when it's actually going to happen. So, I've kind of had my own couple personal scares here, and then it's like, well, no, that's not going to happen. Okay, get long again. Right now I'm in the middle of another, personal crisis here about, is it going to crash? Is my reputation going to go down the toilet because I'm Mr. Matt? I didn't, because the macro crash didn't happen. I don't know, guys, whatever. Anyways, the S&P 500 and the NASDAQ are down about 10%, slightly recovered here. They're really just trending sideways. Market doesn't quite know what to do. This is, maybe this is trending sideways for a little bit longer, right? Because let's go back here for the last time. Things fell down, and then within like 5 days, they had really come back up significantly. But things have come down, and it would be hard to call this a significant recovery, not in the same way that we've seen from other moments. Although, okay, back here, if we go back to, would that be April of 2024? That wasn't a 10% crash. That was only like a 6% crash. So, I mean, things are kind of like hanging out down here. So hypothetically, that doesn't necessarily look that great. Let me put some wave magic on this and see if we have any obvious levels. I haven't looked at. You can really tell I was looking at the S&P this week. Let's see here. I don't think I see any. So, I mean, there was an obvious level to have been found here, right? So this guy right there, that is a moving average, a moving standard deviation cluster. That's where the first bottom was found. Okay, I mean, that makes sense. One thing that I kind of expect from a TA perspective, you really expect to come back and touch the underside of those blue bands, right? You would expect the S&P to try and make it back towards like the 5,888 level. If we extend this line here, so another reason to think that too would be looking at the pleb line, right? And this pleb line is actually quite important. Let's go to the daily so that pleb line shows up better. And clear the wave magic. Yeah, so you can see this pleb line that we've talked about for a while. Actually, it's been on the chart for fucking months now, probably longer than that. This pleb line is a pretty important pleb line. It was broken down just now, and in some ways, it's reminiscent almost to me of the 2021 top, where the S&P broke out of a similar channel as this. That doesn't mean I think we're going for a 1-year bear market here. I'm just saying that that's a significant event to break that trend line. And typically, you do expect after you break down to try and tag the underside of that line. That's a typical thing that happens. Doesn't always exactly happen perfectly. At the moment, the underside of that line is sort of synonymous with also the blue bands that we would want to look at. Let's go to the 2 hour so that becomes more clear for you guys. Okay, yeah. So you'll notice here where these blue bands are, where we talked about 5890-ish, 5888, is pretty close to where the underside of the pleb line is. So, I mean, we're really probably looking for some kind of rebound action into this area. Stocks can be weird. There's definitely less, they're definitely more efficient than crypto markets. So stocks tend to be more efficient than crypto markets, which makes it harder to find solid patterns there, because usually they just get exploited. But okay, fine. Enough with stocks. I don't think there's really too much else here to talk about. I think we skipped over the privacy shitcoins. Maybe we'll go there in a second. Yeah, we talked about the GDP fell negative. We could talk about it again, right? Because that's still contextually important. And maybe some people weren't listening on that show. Yeah, so we have the GDP here. You can see top left GDP now. If you're ever not sure what the symbol is, you can always just look at the top left there. Okay, so GDP for the last reporting cycle, which happened for January. That thing went down to, now it's minus 1.66. They're always revising this shit. They'll report a number, then they'll revise it, then they'll revise it again. It's like, okay, whatever, guys. I think they use that to jack shit around, but it was down at like minus 4%, I think, originally. Maybe it was only minus 3. I don't remember. Whatever, it doesn't matter. It's minus. The point is that it's minus. GDP is not supposed to be minus, right? We want positive. No one wants to hear negative. So unfortunately, GDP for the last number cycle between October and January fell into the negative. And so, yeah, that's a bad thing. That's kind of a recession indicator, right? Having GDP be negative for some period of time. Just so that you're aware, the Federal Reserve and the guys that say whether or not we had a recession or are having one, they always be like, well, it's fluid. Sometimes it might be, and sometimes it might not be. So they're not like, it's not just GDP. If GDP is negative for a couple quarters, yeah, but maybe that wasn't the full picture. And so allegedly they'll take into account like unemployment and I don't know, tariffs, probably not tariffs. They'll take into account unemployment and just like the general trade, global trade picture and the international trade picture, and decide whether or not they're like, well, it's not a hard formula. It's like love. You know it when you see it. So they're like claiming that, anyways, that's how they claim whether or not we've had a recession or not. Anyways, negative GDP is one of those big indicators that says, hey, you're in recession. But one little negative dip doesn't necessarily mean that you're in a recession. So if we see more of that, by the time you see another number here, it'll be too late. Like the market will have already crashed. So it's not really the greatest thing, but at least having one number down there does tell us, hey, that is, again, painting the picture, trying to look at the big overall, what's going on, right? You look at this thing, look at that thing, put the pieces together, right, et cetera, right? So that's part of the picture there. Okay, let me check the comments, make sure I haven't missed anything, because I'm really bad about that. Yeah, if you want to put some of these up here, Tux, we can read them off.
Oh, sorry, I was muted. How's my mic sounding now? I was listening back on YouTube and it was way out of whack, so if you give me a quick mic check.
Yeah, we can hear you. You sound beautiful, fantastic.
Awesome. I do have a new microphone, so. All right, let's go and pull these up. We had a super chat from Sheldon, tipped $1. Doug, great interview with Derek Bros this week. I believe that he does not have his XMR chat set up to where he can receive chats, though. I tried tipping his profile a minute ago. Not receive chats. Oh, maybe like on XMR chat itself or on his like streaming platform. I'll have to take a look at that potentially. FD tipped $1. Maybe we can do other watch parties for Porkfest. Bet Wards, Ace Guy, and Sir Jams a lot could get something going. Argentina/Mexico, hell, maybe even Ecuador do a watch party in Nigeria. Well, we hope that these individuals will actually like come to like if they're gonna travel, we want them to actually come to the events, either Porkfest or MoneroCon. So I don't think it makes sense to travel somewhere to have a watch party necessarily. But if they're doing a watch party in their hometown, I think that's a cool thing to do. Andrew Collins tipped 25 cents. I don't think there's going to be a major crash anytime soon. More like a gradual controlled decline and slow push into technocracy and CBDCs. I could be wrong. My crystal ball broke recently.
Yeah, I mean there's always possibility of the slow decline, the slow roll down. It does happen sometimes. Yeah, and obviously we're all trying to predict the future here, and who of us really knows exactly what's going to happen? Right? It's hard to say. Crystal ball doesn't always. Sometimes, it's in the shop or whatever. Let's see. Someone also asked on the YouTube comments about is there a per capita chart? Yeah, I mean, you could just divide the GDP by 330 million or whatever, or you could maybe do the adult population. I don't know. We could just do that. Maybe there's something else involved with the per capita chart. I really haven't looked at per capita charts, to be honest. But that's probably, I mean, that's probably a reasonable way, especially to compare one country to another country. So maybe it'll be interesting to take a look at the tariffs and see if, like, over the course of a few years, if that affects things. I mean, obviously, a lot of stuff affects things. So if you can't just be like, oh, it was the tariffs. But another thing to think about here on the macro picture, there are, I don't know, there's huge, major tariffs coming in on, I think it's April 2nd, maybe it's April 4th. Good thing they didn't do April 1st, because then they would just renege on that one. But yeah, there's like some massive tariff. I think it's a North American tariff implementation that they're like, okay, we're going to wait on this for something. And it's like another major sweep. So that could be significant. Maybe I'd be looking at that. I actually have a buddy that was, this is funny. He's into the Vedic astrology stuff. And he was using ChatGPT to do Vedic astrology, right? To analyze the Vedic astrology of markets. And the Vedic astrology would say that the crash is coming here like early April, basically. Like I think a key date was March 29th, April 2nd, and then like May 27th were like all key kind of like time frames. So dates and time frames. So I don't know if you're into Vedic astrology. It's the Eastern kind of version, like we got our Western astrology, but obviously Eastern is where all the enlightenment happens. So maybe you should use their astrology instead. But yeah, so a couple things just to clean up here. We missed Monero transactions are sitting just below 30K. Okay, that's better than it was
About
a year
average.
ago.
Yeah, I guess a little better than a year ago.
And actually, it's been very consistent now. So pretty much for the entire year now, for almost 3 months, things have just been sideways here, right just below 30,000. So the consistency is good. Actually, that's something we really would want to see. We haven't seen this level of consistency actually at 30,000. Yeah, we had, the black marble test or whatever the hell was going on with that, but that wasn't consistent, right? That was very spiky. And then after that, things normalized to about the 25,000 area. And now things are seeming to normalize to like maybe the 28,000 area. So, step by step, like lava, slowly growing into our shoes. Monero has big shoes to fill.
Yeah, and I mean, we want to talk about store of value. Like Monero, like since December, Monero's been a really solid, because all these other things pumped, like all these other altcoins pumped, and then they came all the way back down. Like Solana, for instance, did a round trip to 260 back down to 130. Meanwhile, Monero's still sitting nicely above 200 this whole time. So
yeah, we have had remarkably, except for that that spike up in the volatility that ensued, Monero has effectively found a new center point for the past 4 months now, just above 200. Maybe, yeah, you call it like 205, 210 maybe. So yeah, I mean, that's good stuff, right? I don't think we should complain about that. I think we should actually celebrate that in a way. Let's find some people to make fun of. So we're here on the privacy shitcoins. Some of them are less shit than others. Obviously, we're gonna make ourselves feel. But speaking of shitcoins that round tripped, right? Xano hasn't actually fully round tripped, right? So, and I'm sorry, Xano, I don't mean to call you guys a shitcoin, but you know, it sounds good on the air to say stupid shit. So what are you gonna do? You got to be entertaining, bro. So yeah, they're down minus 64% from the top, but they had a pretty big run, right? Like we talked about getting long here on Xano. And a lot of people did get long on Xano. They made almost 10x. Holy shit, that's a big run.
Crazy.
Yeah, I mean that's a 10x run basically. So yeah, I mean when you're like, oh no, I'm down 66%, 60%, like yeah, but you just had 10x. So you know, I'm sure you're fine. I'm sure Roger Ver is totally fine with his Xano bags at the moment. Although you know, I really hope they release the guy. It's bullshit what they're doing to him. Even though honestly, I'm not like a huge fan of Roger Ver. I can never hear him mention. Only once have I ever heard him mention Monero, just singularly Monero. It's always like Monero and Xano.
Was it on the Tucker Carlson show? Is that when you heard it?
I think that was the only time that I heard him mention just Monero. Like it was Monero, and maybe like some other coin, and then Monero.
Yeah, it's usually if it is Monero, it's Monero or it's Xano and Monero, right?
Mm-hmm. And he's had other like coins that he's done that with too. So it's
like Bitcoin Cash, which I think he's not really a part of anymore.
Yeah, I don't know what's up with that. Maybe he gave up, maybe he capitulated, or maybe he just realized it's better to let that project like succeed on its own merits without, you know, his promotion, and that maybe that it would be a mistake to continue that. I don't know. But either way, yeah, he's doesn't seem to be visibly with the project too much anymore. Firo is not doing so well. This is a weekly view here on the charts, so I'm sorry, Firo. Moment of silence for Firo. Doesn't seem like they're doing anything good. Pirate Chain, there will be no moments of silence, only moments of laughing. I'm sorry I'm sorry for the bros that lost money on Pirate Chain and apparently continue to lose money. Again, we're on the weekly chart. Shit continues to go down. There's this big wedge here, so maybe this wedge could be instructive at some point if we ever get like a liquidity intervention, you know, or like the bull market takes off again in earnest. You know, you might expect this wedge, like maybe Pirate Chain can do something like this. And then do that, and then you'd be like, "Oh shit, time to get long." Right? That could happen, but that day is not today. I wouldn't be messing with this coin, guys. You're probably gonna lose money. Obviously, you wouldn't mess with Darrow. Gran is getting crushed. God, so terrible. Moment of silence for Gran. They might have been okay. Like I thought, Gran was one of the. I can't remember. It was Gran or Beam. One of them was not the corporate version. I thought, oh, that's cool, but no one ever seemed to take any interest. So what are you gonna do? Z Crash. Actually, not crashing lately, but you know, it's definitely not doing good. Yeah, about 30% off their all-time lows. All right, Zcash, whatever.
I mean, if we're being honest, you could still easily long like Zcash. Like if we're looking at this trend of privacy coins, like main one is Monero, secondarily would be Zcash, right? So realistically, you could probably long Zcash and make some nice gains.
Yeah, you could. And it's also like it does offer strong privacy, right? Like it does do that. You just have to be careful about your heuristics and moving in and out of the shielded pool, etc. It'd be nice.
Did you just defend Zcash? Oh, there's a horde that's coming at you right now.
Oh no. I usually, yeah, they always somehow get involved in these dogfights with them on Twitter.
Yeah, I mean, that's the reality is that Zcash does have some like cool, like good technology, but they kind of lost at the community standpoint, and people don't like the way that the project is set up, which was a major turnoff for a lot of people. And Monero just kind of has it's a fairly niche audience privacy on crypto still. It's really niche compared to like everything else. And Monero just kind of has that market share. So it's got the user base, it's got the use, it has way more transactions than Zcash. And it's a more decentralized project overall, so.
Yeah. Yeah, we had, and maybe this is better saved for viewers on stage. I don't know, but we've got the O spread attack, and it's like a statistical, removal of ring members.
Speed, yeah, yep.
Or off speed. Sorry, I don't know. I said spread.
It's a weird name to pronounce.
Yeah. So it's like you still have plausible deniability, and to the extent that your that your spend habits, to the extent that they match like the way the modeling looks like, then you could potentially have a reduced kind of ring size in a statistical sense. But like you still, like, not everyone has the same spend habits in terms of timing. So like they're, you know, like those models are. But anyways, this one guy was like, well, Monero ring sizes are now basically one. They said it's the Monero ring size
Basically
is
4.
1 and 2.
A
No, he
1
says
and
it's 1 and
2?
2. Yeah, because he
Who
was
said
like, well,
that?
because of Black Batbot on Twitter.
I don't
Because he
know.
was like, well, because of black marble attacks and because of O speed,
Well, there's no
Monero ring
black
sizes are
marble
now
attacks
1 to
happening
2.
now, so I mean that's.
And then he was like, prove there isn't. That's like, God. Okay.
Yeah, I mean, I watched this. There's this actually pretty cool sort of interview debate between Arctic Mine and this guy Duke, which it was fairly insightful. It was pretty cool. They both had a lot of great points, great insight. Yeah, I don't think you shouldn't take it as, oh, suddenly Monero has a ring signature of 4, but it's like, yeah, there's some models that some high-ended adversaries could use to possibly greatly reduce the anonymity set, and if that's a concern to you, you should take that into account. Which an easy way to do that would be just to have an in wallet and an out wallet. So you've got one wallet which you receive, and then you've got another wallet which you actually spend from, and you just transfer from the in to the out wallet to get more funds that way. And it's not ideal, but this is not really, like, I think some people overreacted a little bit, because this is not really surprising that ring signatures are not foolproof, and that there are ways that you could probably deduce the anonymity set because of the decoy selection algorithm doing specific things. So it's unideal, sure, but it's not all that surprising. And once again, FCMP++ will supersede all of this, and it'll not be an issue whatsoever. So,
the other thing to realize too is like it's about, can they construct a transaction graph? Because okay, maybe they, on some transactions, maybe they can remove, and not just with O speed, but with other heuristics or whatever. Maybe they can remove and figure out which was the actual spend on, I don't know, let's just say 1% of the transactions. But given all the decoys out there, and given all the difficulty of actually mapping a full transaction graph, if they can't build a full transaction graph, if they can't build like even a reasonably partial transaction graph, then you're still very well protected, and you still have a significant plausible deniability. And all of these attacks, you know, they're statistical in nature. So they're not able to quote unquote remove 12 of the ring members. They're able to probabilistically remove them, which says, well, probably none of these were the real spend, but that's going to be wrong. In a lot of cases, like, there are going to be many examples of people's spend habits that just don't match that model, and where they're removing decoys that was the actual spend. So it's like, for them to be able to construct a reliable transaction graph, they still can't do that. Like, they would really need to combine this with a bunch of other attacks.
but of course, as we see what they do with Bitcoin, sometimes they can't even definitively prove something, and yet they will put people in jail for supposed things they did anyway. But the main concern was really, one of the main concerns about this was really, once again, KYC outputs or poisoned outputs.
Yeah.
In that scenario, it's really recommended. So, like, let's say you buy Monero on Kraken, because that's a popular thing to do. It's really recommended that you have one wallet in which you receive from Kraken directly, and you don't actually spend from that wallet. The only thing you do from that wallet is you send to an entirely separate wallet that then you spend from. It's just adding an extra layer, really.
And that also changes your spend habits too. Like, that changes the pattern of how your spend habits, how you're actually behaving in the real world, which again kind of like breaks some of those statistical. And again, I'd have to confirm that with Ruckmium. I'd have to ask him, because I mean, he actually has studied it. He actually could say for sure in a more concrete way. But intuitively, I would imagine that breaks a lot of those statistical analyses.
Yes, that's what it sounds like. And of course, you can't always guarantee that you're just interacting with other people in this sort of like peer-to-peer way, because it's oftentimes, if you spend your Monero, it might be going to a centralized entity directly and you didn't even know it. Or it might go to a BTC Pay server in which they automatically transfer that into like Kraken or something, right? So having those extra layers yourself kind of guarantees a little more, I guess, potentially anonymity set there. So do with that what you will.
Yep. All right. I guess I don't think I have anything else for you guys. We looked at transaction counts. We looked at privacy shitcoins. We talked about this alleged fabled macro crash. So that's it. All right.
Thank you, as always, Body. I'm going to pull up this comment from Fairly Reasonable Investor. Aren't the decoys still robust by running your own node? The hypotheticals only apply to connect to a remote node. No, this has nothing to do with nodes. Has to do with the Monero protocol itself and how transactions are constructed. So this will not change whether you're using your own node or a remote node at all. What we talked about with the ring signatures.
Yeah, so if I understand it correctly, it's about the decoy selection algorithm, and it has been attempted to be designed in such a way that it mimics the average spend habits of your average Monero user, right? So it's taking recent transactions, it's taking old transactions, and it's trying to mimic the actual distribution of how people are spending outputs, to the extent that the actual spend habits of Monero people do not match what the decoy selection algorithm is. That difference, right? You could sort of like draw these two different distribution graphs. And so again, it's all probabilistic, but the difference between those two distribution graphs allows them to probabilistically remove certain outputs and say, well, that's not what we expect the average Monero person to do. And so again, it's on average, which is the wrong word to use, but on average, they can statistically remove with some level of probability, they can remove 12 of the ring members. But I mean, sometimes you have a Monero wallet you haven't touched for years and suddenly you decide to spend it. You might have a series of transactions where you're like spend, and you might just be spending like way loaded up front. And so like your individual habits are going to vary significantly. So it's like you're still very well protected at an individual level for the most part. And as Tux was saying, like you're really like your weak points are when you interact with other entities that have your personal identifying information, right? That's where you really start to run into weaknesses. That's always been the weakness with Monero. They've always had poison output attacks and different types of ways of like trying to analyze you. So if you have a higher threat model, you definitely have to stop and maybe talk to some people and figure out, how do I handle this? You might want to if you're receiving a bunch of outputs and you have thousands and thousands of received outputs incoming to your wallet, you might want to consolidate those and churn the shit out of them and then split them up before you send it to some like KYC personal identifying information entity. And anyways, so hopefully that makes some amount of sense on the attack, on the OSPEED attack there, like what they're actually doing.
Yeah, thanks for adding that. You definitely have a little more knowledge on the decoy selection algorithm. I do. And
only a tiny,
I know
tiny
that
bit, bro.
all the core devs will be very happy for that to go away, because it's been from my understanding, it's been quite a frustrating thing to have to create and maintain and make better. So, and it's like inherently flawed anyway, because it's all probabilistic. But yeah, you said churning, which is basically, for anyone who doesn't know what that is, that's sending to yourself. So that's another way that was mentioned to try and change your transaction graph a little bit, is if you send to yourself, it consolidates all these inputs into a single one, which creates a separate layer and creates it more, I guess, separates it from a little bit more from when you received those funds, because Monero tends to consolidate inputs into like as little as possible, which can be annoying if you're spending a lot, because you might have just one e-note in your wallet instead of having multiple. But that's how it is by design, to try and improve your privacy.